Now our video today is going to be looking at the accounting equation. The accounting equation. The accounting equation in accounts forms the key underlying principle for all accounting transactions. It looks at the link between the business assets, liabilities, and owner's equity, and sometimes we often refer to owner's equity as capital. And this is what makes up the accounting equation. Like any other equation, the accounting equation looks at something equal to something. And in this case, we have assets equals liabilities plus owner's equity. So this is how in accounts we write the accounting equation. Now let's look at this equation a little bit closer. We're going to actually pull it apart and see what each component of the equation means and represents. Let's first look at what are assets. In accounts, when we speak about assets, we are talking about things that can be used to generate money through the sales of goods and services. So some of our assets in accounts would be cash. We use cash for the purchasing of goods or services. Furniture. Furniture is an important asset in a business as well. We need furniture in order to set up, especially when we are setting up in a business. And we can't operate unless we have a building. So these three examples are examples of our assets. Now let's look a little bit closer at our liabilities now. We're asking ourselves, what are liabilities? We know that assets are things that the business owns. What are liabilities? Well, I usually like to say, based on what we would have learned just now, the opposite. So we can say that liabilities are things that the business owes. So we're saying then that the amount owed by the business to other people or businesses are referred to as liabilities. What would be some of the examples of our liabilities in a business? Some examples of our let's go back there a bit. Some examples of our liabilities in the business would be if we have a bank loan, or if we owe our creditors. Creditors are people that we would take items from on credit. Items meaning goods really that we're going to sell again to make a profit. So those are some examples of our liabilities. Now we move on to what is owner's equity. Owner's equity or capital is the money that the owner invests in the business to start up the business. Okay? Now we put all three of these components together, and this is what makes up our accounting equation. Let's look at an example here. We say that Asha opens a business and has assets valued at $40,000 and liabilities of $5,000. So Asha has in her possession $40,000 worth of things that belongs to the business, and $5,000 worth in things that are owed out to the business. Now we want to determine what is Asha's owner's equity, or what she invested in the business. Now based on the accounting equation, we know our assets, we know our liabilities, but we need now to determine our owner's equity. How do we do that? We do that by subtracting the assets from our liabilities to get our owner's equity of $35,000. Now, remember we said at first that our accounting equation is assets equals liabilities plus owner's equity. But we only had two components of the accounting equation. We wanted to find the third one. Therefore, we changed the equation around. And that is one of the beauty of looking at equations. Equations can be manipulated to determine certain components of the equation. So we found owner's equity by subtracting our assets from our liabilities, which will give us owner's equity. Now we can do the same thing if we need to find what our liabilities are. To find our liabilities, that is, if we know our assets, we know how much the owner contributed, we can take away our owner's equity from our assets to give us our liabilities. So we see that there are two other ways that we can rewrite or we can work out the accounting equation. Now this brings me to the end of our video presentation, and I hope it has been very helpful to you.